Travel is a multi-trillion-dollar industry, and if you know my investing style, you know I like to invest in industries that are large. It allows for more room for more companies to grow profitably. And two travel companies I've been following for several years have been Booking Holdings and Airbnb. And in this video, I'm going to compare the two head to head to determine which one I think is the better stock to buy for 2026 and beyond.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So the first metric I'm going to compare these two travel stocks on is revenue growth, looking back a decade. And looking at this trend, we notice excellent growth from each of these two, but Airbnb with better compounded annual growth rates. Bookings has larger revenue overall, increasing from 12.7 billion, more than doubling to 26 billion, and that's good for a compounded annual growth rate of 10%. Meanwhile, Airbnb has increased from 2.6 billion in 2017 to 11.9 billion. That's good for a compounded annual growth rate of 22%, more than double that of Booking Holdings. Now, looking forward, I expect Airbnb will continue to outperform Booking in terms of revenue growth for a few reasons, most notably the smaller scale and then the more convenient offering. Airbnb offers more customization for travelers, more specific needs being served, and people have shown a preference for what the alternative travel destinations that Airbnb offers consumers. Of course, regulatory concerns are a bigger headwind for Airbnb than they are for Bookings, which has more traditional offerings available on the platform like Booking.com and Priceline.com, which are less exposed to regulatory headwinds. The most notable regulatory headwind are in large cities where people have complained about their neighbor's property being turned into an Airbnb, which people don't like to have travelers staying next door. They might be louder than usual, they might be partying, and it's unattractive to have in your community. The next thing I wanted to compare these two on is returns on invested capital. They both operate on an asset-light business model, and they both demonstrated excellent improvement, but Booking Holdings demonstrates the better return on invested capital, being a more mature company at larger scale. In the two recent years, they've been absolutely excellent for Bookings at 48%. Airbnb has been solid as well, but the two most recent years have declined compared to the peak levels in 22 and 23 when people were really making up for lost time in travel. They benefited as a result. And in the two most recently completed years, 18% and 16% for Airbnb, which is solid to be sure, but when compared with Bookings Holdings, they demonstrate a nearly 3 times the level of ROIC compared to Airbnb. Now, the next metric on operating cash flow to sales, Airbnb demonstrates superiority over Bookings, and they've demonstrated that since 2022 when they hit that inflection point and they recovered from the pandemic devastations at 39% OCF to sales, and they've maintained the level around this number at 39 to 40% over the next 5 years from 2021 to 2025. Bookings is solid to be sure, maintaining a level above 35%, but the trend has declined since the peak in 2022 down to 33%. So out of the three metrics we compared these two, Airbnb had the better compounded annual growth rate on revenue and the better cash flow from operations to sales, while Bookings had the better return on invested capital. So now let's get to valuation. When measuring on a forward price to earnings basis, Airbnb is about 20% more expensive at a forward PE of 25 compared to a forward PE of 20. By the way, I'm getting all of these charts from fiscal.ai, which is my preferred data provider. They aggregate a lot of great information, saves me a lot of time. There's a link in the description. You'll get a 15% discount if you use it. So let's look at valuation based on my proprietary DCF framework. Bookings, I calculated a fair value for the stock at 5,364. The current market price is 5,159. It looks fairly valued after applying a margin of safety. Airbnb, meanwhile, I calculated a fair value of $175 and the current market price is $119, signifying an undervaluation using my proprietary DCF framework. So overall, Airbnb does demonstrate a better value on valuation, measuring comprehensively, looking at market multiples and my proprietary DCF. Airbnb, I expect, will demonstrate better revenue growth and improvements in margins and profitability over the longer term, but it also comes with greater risk because of the regulatory concerns. Bookings, meanwhile, should demonstrate solid revenue growth near double digits and demonstrate excellent profitability as well. If I had to pick between these two, I would pick Airbnb as the better stock to buy right now. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.